Hi guys, welcome to my next revision series video for APM. Okay, so I have prepared for you here on performance management model. So I believe that out of these few performance management model, basically one of them or at least one of them should be there in your upcoming exam. Okay, so I hope this video will prove valuable in your revision. So enjoy. So the very first performance management model that I want to talk to you is on VFM. Okay, it's basically referring to the 3 E's of performance measure. Now, this value for money measure is suitable for a not-for-profit organization, because when we talk about a not-for-profit organization, generally there will be some form of problems when measuring performance of this organization, such as the very first thing, all our financial measures in this case are no longer relevant because they are not expected to make profit. Okay, another thing is that majority of these not-for-profit organization operates under financial constraint, so we cannot expect them to be as efficient or effective as a profit organization. So due to the limitation of a not-for-profit organization, so we need a new sets of measure. And over here, we have the model called the value for money measures, or indirectly, you can also call them as the 3E. So the very first E we have is economy. Now, we cannot look at the profitability or income of this organization, but we can always consider the cost of providing the services. So although these organizations are not expected to make profit, but it doesn't give them any reasons to make or to waste resources as well. So therefore, we can measure their performance in terms of looking at the costs incurred by these organizations in providing the services. Now, the second E we have here is efficiency. Now, when we talk about efficiency, efficiency is basically related to the utilizations of resources. So how well this organization utilizes resources to provide the services to its stakeholder. So the focus in this aspect when we talk about efficiency has always been on resource utilization. So input to output ratio. And the final E that we have is actually on effectiveness. Now, an organization is only deemed effective if the organization is able to meet its objective. So when an organization is able to meet its objective, these organizations are deemed to be effective. So in exam, okay, it's important that students take note that when we look at effectiveness, how do we measure effectiveness? Look at the question, what is the objective of this not-for-profit organization? I'm very sure the examiner or the exam question will provide this objective. So it is essential that you look at this objective and you determine from there, okay, whether these organizations are working towards meeting its objective. So come out with relevant KPI to determine whether is the organization able to meet its objective. So you are effective the moment the organization is able to meet its objective. Now, branching off from not-for-profit organization, we have a public sector. Now, a public sector is also a not-for-profit organization, but we cannot say that a not-for-profit organization is a public sector because there are NGO out there who are not-for-profit, but they are not public sector. So basically, a public sector exhibit the similar issue in terms of performance measures for a not-for-profit organization. However, a public sector does have additional issue such as political agenda. So a majority of time, actions or activities undertaken by public sector has some political agenda. Okay, so basically the use of 3E is still applicable in this case. So now that is the first model we have, value for money. Now, moving on further, we have balanced scorecard. Now, it is another form of performance management model, and the focus in this time or the model basically works in such a way where we have to align the operations of the company to its strategy with coming out with relevant measures. So in a balanced scorecard model, it is all about how we align our day-to-day work to the organization strategy and to make sure that this strategy achieving our organization's goal, we will have to then come out with the relevant measures or KPI in this case. So a balanced scorecard basically emphasizes the importance of four different perspectives when we want to align our operations to the organization strategy. So the very first one is the financial perspective. What do our shareholders expect from us? Number two is the customer perspective. What would be the expectation of the individual customer? And the third perspective is in terms of internal business process perspective. And finally, is on learning and growth perspective. So in terms of learning and growth perspective, so the focus here is on human resources. Now, besides knowing these four different perspectives under the balanced scorecard, it is essential that students know as well the benefits and problem of using a balanced scorecard model, because over the years from past year, we do notice that there are quite a number of questions that actually features or tested students on your ability to relate the benefits of a balanced scorecard to a particular situations or some problem. Now, one of the benefit of a balanced scorecard is the use of wholesome measures. So one of the advantage of balanced scorecard is that our performance measure is not just focused on one aspect of our performance, which majority of time is on our financial performance. So a balanced scorecard ensure that a company looks at performance from four different perspectives. Another important aspect is it align our measures to the organization strategy, and at the end of the day, it's all about achieving the organization goal. Okay, besides that, balanced scorecard also helps to ensure that the organization not just focus on internal measures, which are majority of the time related to the performance of the company, but also emphasizes on the importance of looking at external measure. Now, basically, it is on the competitive of this organization. Okay, and finally, it is also important to look at the financial and non-financial aspect. So, because we know that there must be a balance between financial and non-financial measures. Now, what about the problem that an organization face when they apply the balanced scorecard model? Now, the first one that we can have here is conflict in measures. Now, because we are looking at four different perspectives, and with individual perspective, we have several KPI. So there may be too many KPI that we are looking at. So the achievements of one KPI may actually conflict with another measures. So this is the issue when we have too many KPI. The second thing is the interpretation of individual perspective. So the successful application of a balanced scorecard model depends on the manager's ability to interpret the four different perspectives. When a manager fails to interpret the four perspectives effectively, so this may give rise to ineffectiveness in the application of a balanced scorecard. Now, The final problem of a balanced scorecard lies on the fact of selecting the right measure. So as we know, having the right KPI is all that matter. So the effectiveness of a balanced scorecard still lies heavily on the ability of the manager to select and use the right KPI for each perspective. Now, moving on from balanced scorecard, we have the performance pyramid. Now, first and foremost, a lot of students love to ask, do I need to know all the 9 areas of performance within the balanced scorecard? Now, the answer is an obvious yes. Okay, if you are expecting this in your coming exam, so if you are going to have performance pyramid, so I believe you need to know the 9 areas of performance under the performance pyramid. Now, what is so unique about the performance pyramid? Now, the uniqueness of the performance pyramid is that this particular model acknowledges that the performance at one level in an organization affect the other and ultimately leading towards the organization goal. So as we know, an organization is split into strategic, tactical, and operational level. So in achieving or working towards the organization goal, so what happened here is when we want to achieve an organization goal, okay, we need our performance to be going well, not just at the strategic level, but right from the start at the operational level. So when your performance is right at the operational level, it actually contributes toward the tactical and finally your operational performance. So basically, the uniqueness of a performance pyramid is that it is a cascade of actions that ultimately lead towards the organization goal. Now, another important thing of a performance pyramid is it not only focuses on the financial performance, but it also emphasizes on non-financial performance. And it also emphasizes on the need for an organization to look at internal as well as external measures. Now, moving on to the last performance management model that we have here is the building block. Now, building block of performance measure is basically applied for a service organization. So what makes service organization so unique? So the uniqueness of a service organization is what I summarize as ISHOP. So ISHOP, intangibility, simultaneity, heterogeneity, ownership, and finally perishable. So the very first one, as we know, the performance of the service organization, a service organization is intangible itself. The service is intangible, so it's difficult to measure the performance. S, simultaneous. So production and consumption is inseparable. So that makes a service organization unique. The next one is heterogeneity. Now, heterogeneity is due to the use of labor. So because of the use of labor, so we find that we cannot expect consistency and similarity between one service to the other. So think about in a food industry, in a food and beverage industry, so we cannot expect similarity, 100% consistency in the level of services provided. Okay, and the next one, when we buy a service, is basically to consume rather than ownership of the service. And finally, a service is perishable, so there's no such thing as economies of scale or bulk purchasing. Now, Due to the uniqueness of a service organization, so over here, building blocks of performance measure has three things: dimensions of measure, the standard, and reward. Okay, now let's look at dimensions of measure first. Now, the dimensions of measure basically talks about the 6 areas of performance measure that is relevant for a service organization. So the first one needs no further explanation, is the financial performance. The second one is measuring the quality of service. The third one we have here is innovation, the ability to adapt and change. That is innovation. The fourth one is flexibility. An organization is flexible when the organization is able to meet the need of its customer. Next we have is resource utilization. So how well this organization utilizes its resources to provide the service to its customer. And finally, focusing on competitiveness, the ability to compete with your competitor. So there is always a possibility the examination question will ask students to suggest measures for each of these dimensions. Now, after we have the 6 dimensions of measure, then we have the next area under the building block, which is the standard. So standard here basically refers to the target. So dimension talk about the KPI. So the second part is talking about once you have your KPI, so you must set your target. Now, when setting target, 3 important things you have to remember. The first one is ownership. The employee must be able to accept the target. They have to agree to the target set by the organization. So one of the way to get the employee to agree to the target is to get them involved in setting the target. Number 2, target has to be challenging, but it should not be ideal. An idealistic target is demotivating. And finally, when setting target, we have to make sure equity, fairness. So that is the 3 important aspects under standard. And the last part of building block talks about a reward. An organization comes out with KPI, setting a target. The third thing is to have a reward. As an organization or employer, we cannot merely tell our employee that this is your KPI, this is your target, but that's all. An employee needs motivation to work towards the target. So therefore, we have to link majority of this target to a form of reward. Now, when setting reward, okay, there are 3 important points, okay, under the building block. Now, I would like to remind students that reward is actually a separate chapter within your APM syllabus, and there is a very, very high possibility you will have questions on this as well. So I'm going to link the building block reward together with the reward chapter under your syllabus. Now, the very first thing is when setting reward, we have to make sure clarity. So our reward has to be as clear as possible. So the last thing we want is misunderstanding regarding the reward. So this is when conflict, okay, or dissatisfaction with the employer arises. So one such confusion is when the management inform its employee that they will make sure the employee is well rewarded. When the management inform the employee that we will ensure you are well rewarded, but what does the meaning well rewarded mean over here? So it is important that you clarify how the reward works. Okay, so the performance criteria to be entitled to the reward is one aspect of clarity. Now, the second thing is motivation. Now, the reward must lead to motivation by the employee for improve performance. And finally, reward must be on controllable performance. Okay, so now what happened here is reward has to be only on controllable performance. This is only fair because uncontrollable performance is not essential. Okay, when we set our reward. In fact, it can be demotivating if we have reward for uncontrollable performance of the employee. Okay, now moving on to our reward chapter. So there is a possibility that we may have reward, okay, on evaluating students being asked to evaluate different forms of reward. So over here, I have some example. So the first one is, what if a reward is on achievement of budget? Now, a reward on achievement of budget is only suitable when the company uses budgetary control. So if ever this particular question states that the organization reward its manager when they achieve the budget, so very quickly look at the question, the question is this company using budgetary control? If they are not using budgetary control, why have a reward on budget? So next thing is on the controllability of this budget. Is this budget on controllable performance? Is the budget top down? Okay, who prepares the budget? What about the budgetary figures? So these are questions that you can raise when you have evaluate reward on budget. Now, what about a company decided to reward its manager on the achievements of the division's profit? Now, profit contain uncontrollable costs, fixed costs, allocated overhead. So these are expenses which, no matter how well is the performance of the manager, he or she will not have control over this. Okay, and now the next part, moving on to the next thing, no, this is irrelevant, is other forms of reward. Now, some organization felt that, there is no point in giving reward, so they decided that let's make the employee receive a fair fixed salary based on the market norm. But a fixed salary will not lead to improved performance. And finally, what if an organization decided to reward its manager on their ability to get new client? Now, the worry is this may lead to the overpromise by the manager to secure the new clients, and as a result has incurred higher costs than necessary. So that wraps up my revision series video on performance management model, so which comprise 1, 2, 3, 4, and 5 topic, all explained within one mind map. So I hope this revision series video will prove valuable in your upcoming exam.